Welcome to Dukascopy TV with me, Alex Isat. Unemployment in Australia has jumped to the highest level in more than 10 years, following a surprise fall in jobs growth. It is the first time since 2007 that Australia's unemployment rate has been higher than the US, which sits at 6.2%. To talk us through the figures and to discuss Australia's economy is Jimmy Chu, Senior Economist at FXPRIMUS. Jimmy, unemployment rate figures show that unemployment rose sharply in July. Is it time for the RBA to take decisive action?
I think the RBA should remain cool towards the end of the year by holding the rate at 2.5% unchanged. The unemployment report was weak in general, but there's still something positive. The first is the number of the full-time workers increased, offset by the decrease of part-time workers. Also, the participating rate increase indicates more people join the labor force. Spike of the unemployment rate could be also partly due to the sample rotation, as the inflation still stays in the upper band within the RBA target range. RBA has the limited scope to ease at this moment, and we do not expect much shift of its language in the coming September meeting.
Is today's data showing that Australia is heading for a volatile downturn? And can it recover?
Today's data certainly raised the warning to the Australian economy outlook and its currency, which is still the top performer among the G10s. Australian economy, the recovery still heavily depends on the Chinese recovery. In our point of view, we saw the recent rising optimism according to the Chinese economic data, but we remain cautious on its sustainability as the recent data is largely driven by the government target stimulus. Industrial demand in China remains tepid, and it's unlikely to largely benefit the Australian commodity exports without a broad-based stimulus. So the Australian export volume has a very large correlation with the iron ore price in the past 5 years. Overcapacity is severe in Chinese steel sectors, so we do not see this as a positive catalyst to the Australian economy.
There has been a lot of developments in Europe. What impact does the ECB have on the Australian financial markets?
No single policy works all the time in the different cycle. I think that's the similar issue of these two economies are facing now. Okay, in the post-Eurozone debt crisis in the past 2 years, the ECB has lowered the benchmark lending rate close to zero. However, besides boosting the confidence and lowering the borrowing cost, it did very little to boost the credit demand when the lending to non-financial sectors has shown no signs of picking up. That's how we see its recent inflation fall to near a 5-year low at 0.4%. So in Australia, OCR rate has been spurring the lending amount, including those commercial lending, but I think the government should take a bigger role to RBAs at this moment, as the country urgently needs to seeking the revenues, such as the structural reforms after the commodity has been peaked, and also the substantial less demand from China. So I do not think the RBA can do much here.
The ECB press conference has just finished. What do you make of the press conference, and how could it affect the market?
Press conference, I think has not done yet at this moment, but it looks like no extra measures are introduced. Mario Draghi still needs some extra times probably to examine its previous easing announced 2 months ago in June. The uneven growth in the currency bloc becomes more obvious from the last reading of the PMI data this week. Meanwhile, confidence indices in both Germany and the Eurozone have been dropping since first quarter this year. So now the geopolitical risks, such as the sanctions between the EU and Russia, sets to pose an extra deflation risk in the Eurozone. Expectation on an ultimate QE program could rise toward the end of the year, driving the euro lower in the medium term when the dollar demand holds well.
Thank you for your time. Keep watching Dukascopy TV for more news on the economic market as a whole. Until then, goodbye.